Hello everyone, so welcome to this two-part episode of conversation where I'll be talking to Oriol Caudevilla about CBDC and we will be debunking a few myths about the new topic that's going around town right now and discuss some developments in the virtual banking sector in Asia. And this is part of a season 2 of Talk to Founders podcast episode which is available on Spotify and Apple Podcast. Season 2 is focused on conversation about how sustainable finance and how financial technology can help make financial services a greener one. To find out more, click on the link in the description below. Actually, next up, I think we should talk about virtual banking as well, because that's one of the topic that we are going to address today. And it's been a trend in Asia where various governments are coming out with their own digital banking licenses or sandbox. And so could you share a little bit more about that and what's the current trend and what are some interesting facts that each country is doing?
Actually, this is a fascinating topic, worldwide, but also in Asia, especially in Southeast Asia. Starting from the very beginning, as you know, but I think it's worth reminding that, virtual banks, they primarily deliver retail banking services through the internet or other channels instead of physical branches. Virtual banking is to me in many ways the future. The development of virtual banking is kind of entangled, intertwined with that of FinTech. I think that the more FinTech and innovation we have in a certain jurisdiction, the more virtual banks we are going to see eventually arising. I think it's also important to remark that even though, going back again to the media thing, it's common to see virtual banking referred to as a synonym of digital banking, it's both concepts are not actually the same. Digital banks are normally the online only arm of a bigger player in the banking sector, while neobanks or virtual banks are completely digital. They exist independently to traditional banks, even though it is possible for a neobank or virtual bank to be backed by a traditional bank. That is possible, but it's not like the digital arm. So, in other words, if you like this, let's say that we have this bank XY, which has this digital banking app. This digital banking app is not a virtual bank per se. It's simply digital banking, because they are part of the same bank. It's a digital only arm of the bank that we have is physical bank branches, whereas a neobank is an other concept, this virtual bank concept where this bank, will not have, for example, physical bank branches. So it's a completely new idea in that sense. Moving forward, I think that the key point here is the idea that it's no longer possible for banks to keep offering the same services in exactly the same way that they've been offering for the past decades. They need to adapt to the current times, and the current times demand for technology, for digitalization, for FinTech, especially. Since the pandemic began, even more than before. It doesn't mean that there is no place for traditional banks. I'm not saying that. I think that traditional banks actually, they have an amazing future. As long as they adapt to the current times, the future may be as bright as ever. They simply need to adapt, and I think that idea is key. And going back to your question, well, I think that virtual banks provide many benefits. They allow a faster speed and efficiency. They allow you full 24/7 access to your account and bank information, etc., etc. Even though virtual banking is a rising phenomenon worldwide, lately there has been a very interesting increase in Southeast Asia. To the point that we are seeing lots of changes right now, and actually, if we take if we compare the current situation with 2 years ago, the virtual banking landscape in Asia with 2 years ago, we see that it's very different now. It's very different. I think that leaving aside Korea and Japan, two countries about which I'm going to talk later, I think we could talk about Hong Kong, for example. That the Hong Kong the Monetary Authority, the HKMA, they granted 8 virtual banking licenses in 2019. And those 8 virtual banks were launched last year, 2020. And, as well, the part very well, of course, being in Singapore, that the Monetary Authority of Singapore, MAS, announced in late 2020, in December, the 4 successful digital bank applicants. This kind of announcements or licenses do not come from nowhere. I mean, they are the result of years of study, of sandboxes, of testing. The one more example, for example, is Malaysia. Following this trend, for example, Malaysia's central bank, which is Bank Negara Malaysia, issued its licensing framework for digital banks last year to kickstart digital banking in Malaysia. I mean, as far as I know, they received 29 applications for the 5 digital banking licenses that are going to be granted. And I think they're going to launch their services, those 5 winners that we don't know yet who they are, in the first quarter of 2022. So it's interesting because digital banking, allows us to see how this collaboration between this traditional banking world and fintech firms is actually going to play a key role in the future of finance. I mean, I remember that maybe until 2-3 years ago, many people still tended to talk about fintech as a competitor to the incumbents. Now, so it was quite common to see this kind of dichotomy between it was either fintech would survive or traditional key players, but it's no longer like that. I mean, I think that everyone in the market has realized that it's all about cooperating right now. So this is why if we actually take a close look at those virtual banks, we realize that most of those virtual banks, either in Hong Kong, in Singapore, in Malaysia, are nothing else but joint ventures or partnerships between many different firms. In some cases, we're talking about incumbents, traditional banks, teaming up with fintech firms and teaming up then with communication firms, and then all together creating this new virtual bank. And it is like that because there are certain areas in which fintech firms are stronger than incumbents, but at the same time, there are certain areas where incumbents are much stronger than the virtual banks. For example, I mean, when it comes to technology and technology adoption, fintech firms tend to be stronger. I mean, in the sense that fintech firms they were born precisely to be technology oriented. So this is why they may bring to the table many interesting tech solutions that traditional banks can leverage. But at the same time, those incumbents, those traditional banks can have as well this experience in some cases of 50, 100, 150 years of doing business, of having this huge portfolio of clients, no? I mean, either retail or institutional clients. So I think it's this combination that is happening in Asia that allows us to see how strong virtual banks can be. And I think it's very interesting because I'm not saying it's not happening in Europe or in the US, but I think that generally speaking, many virtual banks in Europe are still projects in which you don't see so much collaboration. It's normally more like this fintech firm applies for a banking license and they get it. But in Asia, you see this kind of idea of collaboration, where you see all these different companies teaming up. And I think that's actually very relevant. I mean, for example, just to cite a few examples, Mox Bank in Hong Kong was created by Standard Chartered, which is, of course, an incumbent, but in partnership with PCCW, HKT, and Trip.com. Same idea for Fusion Bank. It's backed by Tencent, ICBC's Hong Kong unit, the Hong Kong Exchange, House Capital, and Perfect Reach. So you see that many different actors teaming up. And I think that's, that's a good idea or a good sign, or maybe should I say a good proof of not only how interesting can be virtual bank for a client, but also how interesting those incumbents find this area, because otherwise they wouldn't be tapping into this new area, this new market.
Right. All right. Thank you for that. From what I'm seeing, right, there's a huge big tech's involvement in the virtual banking scene as well. And they try to compete for the biggest piece of the pie to actually have a greater market share on the virtual banking sector. So some would actually believe that this is actually detrimental to the progress and, innovation of the virtual banking world itself. Banks, have to actually try to offer a unique product and to compete with these virtual banking world, right? And so if all these big techs are actually doing ultimately doing the same product with a different brand, what's is actually, the key to, the progress in the virtual banking space in the first place? Because at the end of the day, if they actually compete to try to obtain, the same piece of the pie and by offering the same product, right?
No, I mean, I think that there's going to be a progression. Now we are still like at a very early stage. So in this very early stage, we are seeing like many new actors, no? I mean, entering this market and tapping into the opportunities of this market. I think it's going to follow like natural process. I mean, not all those virtual banks, and I'm talking just about Hong Kong or Singapore, I'm talking like worldwide, are going to survive, and thrive. Some of them will, for sure, and some of them won't. So I think it's going to be like a filtering process. Now, I mean, eventually, as time goes by, some of them will survive. They will, and I guess those which will survive will be those which will innovate the most, create more new products. So I know that initially it may appear that what kind of innovation are we seeing if we see 8 virtual banks, for example, in Hong Kong or in Malaysia 5, offering the same. But it's not actually like that, because first of all, not all of them offer the same. I mean, even right now there are differences. Actually, the 8 virtual banks in Hong Kong and have many differences. But even if they were to offer the same, it doesn't matter, because I guess that let's say in 5 or 10 years from now, not all of them will still be there. I mean, some will make it much better than now, and some others will not be that lucky. So I guess it's going to be like a filtering process. One key example in here, for example, is Japan. Japan is a very, Korea is an interesting example as well, and Kakao Bank, Toast Bank, but I think Japan for our purposes right now is much more interesting, because it has a unique landscape in regards to those digital banks, internet-only banks. This is so because the first actually internet-only bank in Japan, the Japan Net Bank, which now is known as PayPay Bank, was actually launched in 2000. So, 21 years ago. And there were all those other banks like Rakuten Bank, Sony Bank, Sumishin Bank. They were also launched many years ago. This was the first generation of online banks in Japan. And now in Japan, we are moving towards a second generation of internet banks. So we know, for example, companies like Natch, B43, Mina Bank, etc. So in the second generation, this new generation of virtual banks are developing a much more maybe innovative banking system using alternative data. So my point with this example from Japan is that there is a second generation of virtual banks, to put it this way. So this pretty much might apply anywhere else. It's true that now we are seeing many different actors appearing and being created, being launched. And we may think that why do we need 50 offering the same? This doesn't go against innovation, but actually I think that's precisely part of the idea of innovation. The more virtual banks we have, the more we'll survive in the end, and the more they will need to compete with each other and adapt, for new products and come up with new ideas. That, for example, some of these banks in Europe are offering virtual banks. They're offering also crypto transactions, for example. There are many new areas that they can tap into. So being virtual and being banks that target, generally speaking, the younger segments of our populations also implies that they are maybe more free to some extent to create, to try to innovate as long as they can, according to their local regulations. So that's why I think that what you mentioned makes sense, but I think it might be the opposite. This actually may benefit innovation in the long run.
I see. Thank you for that. And I love the part where you actually mentioned about the survivability, right? Because it's one of the key factors that, contributes to, the innovation and the progress of the virtual banking world, right? But at this point of time, which country would you say is going on the right path? And, what are the key success factors to a so-called good virtual banking ecosystem? And what are they lacking right now?
That the area that I know the most is Asia. I do focus on Asia. I think that
Okay.
Japan and Korea are like in very good shape, no? Because in Korea they only have like 3 virtual banks, but the 3 of them are really like very strong. No? K-Bank, Kakao Bank, and DOS Bank. So those 2 are like good examples. But I would say that right now, Hong Kong and Singapore are moving like towards a great place as well in that area. And Malaysia's latest move, I mentioned from Bank Negara Malaysia, seems to be very interesting as well. So, leaving aside Japan and Korea, I would say that perhaps we should try to focus in Hong Kong, Singapore, and Malaysia, perhaps. I think that especially the first 2, but Malaysia as well. No, what they're doing is very interesting. Hong Kong is more advanced because they started before, so the 8 virtual banks are already like fully operational since last year, and actually many people are using their services. I think one of the key points for these banks will be to try to change some people's mindset in the sense that, for example, talking about Hong Kong, I know many people who opened bank accounts in one of those 8 virtual banks. Basically because it's very easy to do so. You only need your Hong Kong ID, and pretty much that's all. And it just takes like not more than 10 minutes to download your app and fill out everything. And they do the compliance checkings, and you can have your account open very quickly. But many people's mindset still is that they get their payroll in a traditional bank, they have their savings in a traditional bank, they make like their biggest payments through a traditional bank, and they use these accounts opened in virtual banks more as a wallet, where I don't know, where you put like maybe $1,000 that I'm going to be using for my expenses this coming month or whatever. No, so it's still like used for me like small transactions. So I think maybe like the next step will be for those banks to try to convince people that even though they haven't like been existing for decades, and even though there is like no physical branch, they can actually offer the same services and with the same quality as traditional banks. Because I know that some of them are offering also loans and everything, and they will tap the mortgage market as well. But people are still like maybe a bit reluctant to fully move towards virtual banking. They are used, we're going to say partially, but mostly for those smaller transactions. So I think the key or the thing that they will need to try to do is that, to convince people that they are as how to put it, as valid as a bank as any other incumbent.
Okay. All right, cool. All right, thank you for that. And which brings me to another point. Because as more challenger banks are coming up, right? And what do you think we should be concerned about? Because in my opinion, right, compliance will be quite a big issue due to the intense competition to adopt customers. And the reason why I'm saying this is because as competition heats up, right, they will be willing to slack on some entry requirements and, meaning less stringent KYC, just to drive adoption and, be part of the competition. Like you said just now, it's actually pretty easy, right, to actually be part of the, be a virtual banking customer, because all you got to do is just download the app and then, you just sign up and there will be very few, KYC process going on. So what are some of the issues that you think will be, arise with more, challenger banks coming up?
I don't think that's an issue actually. You and everyone else needs to be rest assured that if a bank has been granted a virtual banking license, it means that they comply with the rules, with the laws, and they meet the requirements established in that jurisdiction. And if I say, and this is true, and you see those banks advertising that it's only going to take you maybe a few hours or one day to open this account, it's not because they're skipping any part of the process. It's simply because they optimize their processes to make them much more efficient. They are going still to ask you for your ID. They're going to go through all the KYC and AML procedures established by the local and international laws, because we're talking about very sensitive areas. So I didn't mean by that before when I talked about how easy it was to open an account in a virtual bank either in Hong Kong or Singapore. I didn't mean that they are skipping any part of the process, because they don't. It's easy and simple because most of the process or part art is like completely digitalized. Now it's been made digital, and then all the process has been like optimized. So this is why what you can get like in a like an incumbent in maybe like 7 days, you get it in like 24 hours. But it doesn't mean that the account once open, or maybe it doesn't mean that the account holder has not been like so thoroughly like checked like in a traditional bank. No, it's not that easy. So I don't see many compliance issues in that regard. I mean, there might be issues if that specific jurisdiction like didn't like comply with the requirements and were like less strict. But this is like a case on case basis, and we cannot like know where that's going to happen in advance. But that's one thing is for sure, though. In all those jurisdictions we mentioned before, like either Hong Kong, Malaysia, Singapore, Japan, Korea, that is not going to be an issue at all.
So, the next question, and probably the last question on the idea of virtual banking, right, is what about their path to profitability? Because in Singapore and Hong Kong as well, I believe, virtual banks are actually struggling to, make profit, and, they are going for an uphill battle to reach profitability, right? So what's your take on that?
No, I mean, it's a long process, actually. I mean, we're talking about banks that were launched like very recently. Even the ones in Hong Kong were launched like throughout 2020. So in some cases, we're talking about banks that are like not older than 1 year. So that means that they are still like very young as a company. And as I said before, changing the mindset is difficult. So that's why it's going to take a while to become like fully profitable. Because many people still see them or use them, as I said before, as a bank just to put some small amounts of money, but not like as like banks where you can like do all of the things that you do in a normal bank, even though you can in some of them. No, so I think it's more like a thing of it's a matter of time and mindset. I mean, they will become profitable. Some of them. I mean, it's what I said before. I mean, I'm not going to say that all the virtual banks that are arising. I mean, any country in Asia or Europe or the US will actually survive. I mean, of course, some will not. But still, I mean, this is an area where there is like a huge room for future profits and for growth. Because, I mean, it's not just I mean, maybe this is more difficult to see in Hong Kong and Singapore, where people, they are already banked nonetheless. But in places like, let's say, perhaps the Philippines, India, Pakistan, even Sub-Saharan Africa, Latin America, the financial inclusion, as we spoke, is actually, a big issue. So a tool which allows people to become banked is actually beneficial, not just for that, like for the economy, for the government, but also for the very own virtual bank, because there's a huge pool of customers that are available to them. Like only in Southeast Asia, there are more than 290 unbanked people. So let's say that, I don't know. I know that some of them are unbanked because they don't have actually money. So, I mean, in that case, I know that the virtual bank or a CBDC will not make much difference. But in many cases, these people actually have money. What they lack, and they have laptops and cell phones, what they lack is access to a physical bank branch, for example. So in that case, a virtual bank may be a huge opportunity to promote financial inclusion, but also for the virtual bank to grow in those areas. So imagine, I don't know, that out of those 290 million people in Southeast Asia, like we managed to bank through virtual banking 40% of them. So, I mean, we're talking about almost 140 million people that would become banked thanks to virtual banks, and at the same time, a potential pool of new customers of 140 million. So virtual banking has actually a huge room for growth in both developed and developing countries. The thing is that some of them will be profitable, some of them will not. I know people mention this as a struggle so far in certain places in Asia, but that's mostly because all virtual banks in Asia are still very young. So they are still on this growth phase. I mean, it's very common even for startups to not make profits depends on what, in 3, 4, 5 years or even 5. So those virtual banks are still very new, and people needs to get used to them, and they need to compensate the investment they made, in creating the bank. But they will become profitable for sure, some of them at least.
Okay. Yep. Thank you for that. I agree with you. It will take some time as well, for it to reach profitability because after all of them are very young banks, right? And the traditional banks, the legacy banks themselves, they've been there for hundreds of years and they have a pretty solid track path to profitability. So if those banks actually take that long to actually become big as they are today, it will take a while for virtual banks to reach that point. And thanks to financial inclusion and the underserved and the underbanked, right? It will probably be quicker for virtual banks to actually accelerate and reach the profitability part because there's a huge market out there, and in countries like Philippines that you mentioned, right? They have a huge population that have no access to the financial services and things like that. So virtual banking will be something which going to be real revolutionary, and profitability will be easier for them as well because it's easier for them to adopt a higher number of customers to the